How well do you know the rules of the company you've given your money to? We think of banks as places where our money is safe and where we can get help when we need to pay for something big. But you can't forget that first and foremost, banks are businesses, and their bottom line will always be their top priority. Even though they can't lie to you or steal from you directly, many banks don't tell you about some of their terms, especially those that might make them look bad. In fact, Andrew Jackson once said, "If the people only understood the rank and justice of our money and banking system, there would be a revolution by morning." He said this long before the Federal Reserve was made. Because since the Fed was made, the banking system was changed a lot and is now even more in favor of the rich. The problem is that most people don't know how the system works. They don't know how money is made, and they don't know how the Fed works. Because of this, only a small number of people actually benefit from the system, while others lose out. So let's find out what banks don't want you to know. What do they have to hide? Let's find out. If you're new to the channel, hit the subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Number 1. Banks use your money to do business. Do you know what makes people interesting? We spend our whole lives looking for jobs, working hard, and building businesses in order to make more money. Even so, most of us don't know where the money comes from. Why is this piece of paper called money and not something else? Most importantly, it's a piece of paper with pictures and numbers on it, which means it's being printed somewhere. It's not something that grows on trees or falls from the sky. Before you click away because you think you know the answer, let me make it clear that it's not the government. In fact, the government takes out loans, just like you do. And trust me, it has a lot more debt than you could ever think of. It sounds strange because if it's not the government, who has the power to print money? Every year, the government has to build bridges, schools, and hospitals to keep the country going. However, all of these things cost money. Gold and silver were money in the past, so you either earned them or borrowed them from someone else. But it works differently in the modern world. When the government needs money, it borrows it from the Federal Reserves as a loan with interest. Where does the Federal Reserve get the money? It is made from ink and paper. The government then uses that money to build schools and infrastructures. This is one way that money gets into the economy. You see, when people get money from the government, they put it in the bank. The bank then lends it to someone else and the money goes all over the world this way. But this is just a small part of how money is made. Here's how it works. About 95% of the money in the world is just numbers that banks made on computers. When you put money in the bank doesn't just put it in a safe. Instead, it lends it to someone else at a higher interest rate, which is how banks make money. But then, why does your bank account say that your money is still in the bank and you can take it out whenever you want? Because banks can lend out 90% of the money you deposit and keep only 10% of it in case you want some of it back. They keep your account as if your money is still there. Let's say you put $100 in the bank. The bank will lend out $90 of that money, but it will also make another $90 out of thin air to show you that your money is still there. Then those $90 will go to another bank, which will keep 10% of it and lend the rest, making even more money and so on until the $100 that were made at the beginning have turned into $1,000, if not even more. Most money is made this way, which is why 95% of our money doesn't exist in the real world. The strangest thing about this system is that the money that was printed in the first place was loaned to banks and the government. In other words, the government or banks have to pay back more money than there is in the system. This means that debt can never be paid off. For example, let's say there isn't any money in the system yet. You go outside and ask the Fed for a loan of $10. It says yes, but you have to pay it back with 10% interest. So you will have to pay it back $11. Now the question is, where you'll get the extra dollar if there are only $10 to start with? The answer? Nowhere. We use these pieces of paper as money because we trust this system. But in fact, they are not backed up by anything. Therefore, invest in real assets such as stocks, gold, or real estate. Number 2. The history of Fed. The United States didn't always have a strong economy. In the 1800s, the country was in a lot of trouble. The country was almost destroyed by the Civil War, and the stock market didn't work right. Back then, many European countries had a central bank to deal with financial crisis, but the US didn't have one. So in 1906, a well-known banker wanted to make a lot of money by making United Copper shares go up and forcing short sellers to buy his shares so they can get out of their positions. But his plan didn't work because the short sellers found another way to buy shares of United Copper. That move put the company and many other banks out of business. When people heard that the bank was going bankrupt, they rushed to the bank to get their savings. As the banks ran out of cash, they stopped lending money to their depositors and went bankrupt one after another. The stock market fell to its lowest point ever. Back then, there wasn't a central bank to make people trust banks again. So, Wall Street turned to JP Morgan. He put a lot of his money into some of these banks to restore people's faith in the banking system. He also persuaded other wealthy bankers to do the same, which kept the economy from failing into a crisis that would have lasted for who knows how long. The US then learned that it couldn't count on the bankers' honesty. It had to set up a central bank that could step in when things went wrong. But it wasn't easy because there were too many people who didn't agree, such as politicians who work for their people, Wall Street bankers, and other wealthy individuals. Over 100 of the richest people in the United States got together on Jekyll Island in Georgia and decided how the Fed would work. In 1913, the Fed was finally made. But not just one bank is doing this. It is made up of 12 banks in different parts of the country. Each bank also has to keep 6% of its capital in the Regional Reserve Bank. In exchange, the banks own shares in that bank. This basically means that the rest of the banks in the country own the Fed. It seems like the system couldn't be more rigged since the big banks control the only bank that issues dollars. However, every major bank in the US is a public company, which means that if you buy their stock, you can become one of those owners of these banks and indirectly an owner of the Fed. Number 3. Your bank is not in charge of your finances. Most people don't know that banks are not there to look out for their customers' best interest. Their goal isn't to help you get the best deals or get out of debt or even help you get out of financial trouble. Banks are profitable businesses that have to make money for their shareholders. Like any other business, they will do what's best for themselves by selling you products and services that will help them more than you. Yes, sometimes your goal might be the same, but not always. So when a bank tells you to do something, just because the teller is good looking and wears a fancy suit doesn't mean he's giving you the best advice. Every bank teller has had a lot of training to learn how to get you to pay for that service before they try to sell it to you. So think for yourself and don't agree to anything until you've given it some thought. Make sure to compare rates with other banks all the time. Don't be fooled by how nice they are to you because that could cost you a lot of money in the long run. And we're halfway done through the video. What do you think about these points? Do you agree with what has been said so far? What struck you the most? We'd love to hear about that in the comment section below as we all try to help each other out. We'd love to hear what you think about all of this. Also, please do hit that small like button if so far you see this video as interesting. And going back. Number 4. A bank is not a place to invest your money. Some people get angry when they see how low rates are at banks. Today, if you put your money in a fixed deposit, it's almost impossible to get a return of even 1%. That wasn't always the case though. For a long time, lending money and getting interest was a good way to make money. However, money doesn't always have any value on its own anymore. So stop thinking of banks as investment tools and start thinking of them as places to manage your money. If you still want to keep your money in a bank so badly, you could buy their stocks. Goldman Sachs, for example, has a dividend rate of 2.1%. which is much higher than their fixed deposit rate. You'll also make money if the stock goes up. And the best part is that you won't have to keep your money in the bank. You'll also be one of the owners of that bank. Number 5. The more money you have, the less banks charge you. The main job of banks is to take money from people who don't need it and give it to people who do. This is how banks first got started. But the way money works has changed since then. When you live from paycheck to paycheck, banks don't see you as valuable. They can't get much money from you, so you are not a valuable customer because the most they can do for you is give you a small loan and a credit card. But if you're a billionaire, for example, the banks will give you much better terms in hopes that you'll keep your money in their banks or use them as your main bank for your businesses. This is clear from the fact that the mortgage rates that banks offer to very wealthy people are usually much lower than the average rate. Henry Ford once said, "It's enough that people of the nation do not understand our banking and monetary system. Or if they did, I believe there would be a revolution before tomorrow morning." Well, that's basically the 5 things banks don't want you to know about your money. And thank you guys so much for watching today's video. If you enjoyed this, then you will probably learn a lot more from watching this other video, the 5 signs that you're on your way to becoming rich. If you click on the screen right now, you can go and watch that. Do you want to learn more on how to thrive wisely? What videos would you want to watch next? Feel free to comment down below. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.